All right, everybody, welcome to day number 3 of Southeast Asia DeFi Week. It's exactly 3 p.m. and we are going to get started right now. So let's begin. Okay, today we're going to cover a new topic, a really exciting one. We have another DeFi protocol to cover, and just a moment. Okay, we are right now on the 4th day. Okay, we've already covered 3 different DeFi applications throughout the week. So we have Aave and Wrap Bitcoin. Okay, left for tomorrow. Very quickly. We have Colbert. Okay, and myself here as your moderators for today. And Southeast Asia DeFi Week is actually brought to you and supported by a multitude of partners from all over Southeast Asia, including Blocklime, the blockchain development firm that has helped to develop more than 1,000 blockchain developers in the last 3 years. We also have our friends from Ethereum KL, our friend Harif, who works for Etherscan, supporting this event as well. Thank you so much, Harif. We are supported by SS Blockchain Association of Malaysia, Ivan on Tech Academy, the YouTube channel, as well as the place where you can learn and get certified to become a certified expert in blockchain. We are supported by CoinGecko, Asia Blockchain Review, our friends from Indonesia, Crypto Watch. Thank you, Danny Taniwan, TechCryption, Super Crypto News down in Singapore, Crypto Ticker in Germany, and our friends up in the north, Technology for Penang, who is running it, is our friend Kariku. Thank you so much. Together, our mission is to help more people to become what we call cryptocurrency citizens by understanding what cryptocurrencies are in a safe, neutral, and easy environment to learn about the technology, and help people to differentiate what is real, what is fake, so that you could quickly identify them and move on and pay attention to capture real opportunities in the space. Part of our mission is also to help people to find remote work and generate an alternative source of income, particularly at this very unique and challenging time that all of us are going through globally. One of the industries that's actually booming and hungry for talent is the cryptocurrency/blockchain industry. So remember, learn it right, okay, and get educated, get informed, so that you can find remote work and generate alternative income in this industry. And by helping more people to be educated, what basically our goal is to make Southeast Asia become a very attractive destination, so that well-funded and reputable blockchain projects can find their local user, adopters, early adopters, fans, and champions. Uh, as has become a tradition for our events, do stay till the end of the session for the instructions on how to receive your unique proof of attendance NFT token. We give one unique one every single day to reward you, for investing your time to learn something new. So think of it as, what are these proof of attendance tokens? Think of it as like a certificate of attendance, except it's not a paper one, which you rarely use it, and it can be easily damaged or destroyed. When you receive like a paper certificate, and the moment that it crumples, you kind of feel like, oh, done it. So these proof of attendance tokens come in the form of a cryptographic token. An Ethereum-based one is of limited quantity. It is used, is given to you as a proof that you have attended and you have invested your time to learn something new. So you can actually deposit it in the cryptocurrency wallet of your choice, and you can show it to people in the future, whether is it your friends or your colleagues or your future employers, that you have actually learned this and this topic, covered this topic before. By also collecting these tokens, you can use these tokens to potentially claim future rewards and at events. Like, for example, one of the people that actually do this is DEF CON. So DEF CON is the annual Ethereum event that happens once a year, and they have done like 5 so far. Next year, when they do their 6th DEF CON in Bogota, true to their tradition, if you can show that you have attended DEFCON 5, 4, 3, 2, 1, you can actually redeem more rewards at the doorstep. So this is something really, really cool to have. Now, a note is that although this is something that it is transferable, please don't do it, because why would anyone want to transfer, okay, in a proof of attendance token? It is going to be, if you do it, it's going to be visible on the Ethereum blockchain, which is a open, transparent public ledger. So just don't do it. Okay, it's a game theoretic thing. Now, for steps on exactly how to claim your POP token, after you have received, after you have filled up the feedback form and you follow the instructions at the end of the session, we will send you a unique custom link that it's unique to you. And it will look something like this. And all you have to do is to paste your Ethereum wallet address into the inbox and click claim POP token. And that's it. Okay, you don't need to connect your wallet, because the moment that you connect your wallet, you would need to incur paying a gas fee. And right now, gas fees are temporarily abnormally high. So we recommend using a bot. Like, there's one available Telegram bot called Gas Price Tracker to monitor the gas prices. And when the gas prices have come down, then you can revisit the link, connect your wallet, pay the gas fee so that you can receive your token. Cool? Okay, very good. Now, I also receive a lot of questions about this thing called gas price. What is gas? So gas is gas is basically a very is a transaction fee. Is what we describe a transaction fee. Is a very small piece, a small amount of ether that is paid, okay, in order to make a transaction on the Ethereum network. Now, if you want to know what the gas prices are right now, you can go to efgasstation.info and you can actually see what the gas prices are on real time. So, and what happens is that you can see that if you wanted to execute a fast transactions, for example, what is the price? So currently gas prices are really abnormally high. So use the bot. Okay, again, it's available on Telegram. It is free to use, and you can set it. Like, for example, you input a command /level 10. So this will alert you once the gas price has fallen below 10 Gwei. And let me put up your, so when this drops from 18.2 down to 10, you will receive a live notification. So some of you asked the question like, Jason, what should I what gas price should I wait for? So for me, I would wait until this thing drops to like 15. That is why I set, okay, the bot to inform me when it's 10. All right. So for these kinds of like not really urgent, okay, the tokens are yours. You can, but it is better to just wait until the gas prices have come down, and then you pay the gas fee and receive your tokens. So I'd like to just give a shout out to our friend Dave Appleton for creating this bot. Okay, and give credit to him for this free tool that is very useful. All right, so for those who have not claimed your proof of attendance token for yesterday, here's your chance. Okay, scan the QR code or visit bit.ly/melon_June03. Fill up the form. You have until 6 p.m. today, and then is the cutoff time. All right. Now, let's quickly do a recap of what we have covered in the last 3 days. The last 3 days have been really, 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 really exciting. We covered Maker, which is a protocol that has created a price stable coin, and because of that, it allowed a lot more decentralized financial applications to exist. Also, you learn, okay, how you can, if you have idle cryptocurrency holdings, you can collateralize them, you can deposit and collateralize them, and have access to a new option of finance. You can get a DAI loan through Maker. Then on the second day, we learned about Kyber Network. And what does Kyber Network do? Kyber Network is a protocol that solves the liquidity problem as we handle more and more crypto assets. And it enables us to quickly swap tokens using decentralized exchanges directly from our wallet. Then the next day, we learn about Melon, a protocol that allows anyone, okay, to set up a fund quickly. And what basically that does is that it empowers the smaller fund managers to prove their worth and build a track record much quicker and at much lower costs. So I'm really excited, okay, for the topic today. Today we're going to be talking about Aave. And if I pronounced it wrong, okay, I think that the founder, because we have the founder today with us, all right, we're so lucky to have the founder. His name is Stani, to share with us, okay, what Aave is. Thank you so much, Aave, for spending the this afternoon with us. Okay, are you there, Aave?
Yeah, I'm here. Yeah. Basically, yeah. Thanks for having me. It's pretty cool to be here.
So is it pronounced Aave? That's the first question I would like to ask.
Yeah, exactly. So it's Aave. So it comes from the Finnish word ghost. So that's why we have the ghost logo everywhere, and it's kind of like a friendly ghost.
Okay. All right. So, can you give a quick introduction, okay, to yourself and how you came into the blockchain space before you go into your presentation?
Yeah, definitely. So I think like in terms of like blockchain space, the very first touch was Bitcoin many years ago, but I never kind of got it like in the adoption level. So basically, I understood what is Bitcoin and how it's used, but never went all the way into the blockchain infrastructure. And then when I was in university and I was studying, I was more interested, getting more interested into the blockchain space and got involved into the Ethereum community. And basically, I was studying back then law. I used to do software developing before that, but then went to law school and tried to kind of figure out like how could you apply this technology into the legal field. Now, I was
Mm,
very heavily always into financial finance, financial instruments, and then I noticed that actually you have more use cases in the finance itself than basically the legal field. So I got quickly attracted into the building financial applications on Ethereum, and then we built our first
mhm.
application, which was ETHLend. So it was the first Ethereum-based, well, actually the first blockchain-based lending protocol. And since then, we evolved into Aave and kind of like in short of a few years. So it has been a pretty interesting journey so far.
All right. Okay. So we're all excited to learn about Aave. I'm going to load up your slides right now. Can you share with us, okay, um, what is Aave and why do you create Aave?
Yeah, so I think Aave is a kind of like our goal. Once we created ETHLend, we basically had pretty interesting lending and borrowing volume. I think in at some point we had over 3 million locked value, and this was the era before stable coins, and when assets had like very low market capitalizations, and also this pool liquidity models didn't exist, and so it was very early, and even the user experiences of many of the dApps were quite clunky. And after that, like what we learned from the experience, and kind of we saw that the DeFi, decentralized finance, started to become a like trend that people started to use DeFi. Previously, it was uh, developers building nice things, and now it's about actually users using those nice things and without giving custody and so forth. And we wanted to continue this narrative, so we started to focus on Aave protocol, and we rebranded as well. And what our goal was is basically not just to lock value into the asset. So for us, it's not important only that you deposit assets and some of the asset gets borrowed, but also those assets that aren't borrowed out, they're somehow used. And then we integrated flash loans, which allows borrowing of the funds with one transaction, which allows developers to build even more interesting products into the market. For example, uh, you could refinance your loan from Compound to Maker without repaying your DAI. by taking flash loan and returning it in the same transaction. It sounds very technical, but for the end users, it's pretty simple once someone develops that, and though there is already applications for that. So that's kind of like the thing, like how we built Aave, and we launched on January, and since then it has been pretty interesting growth. I think there's now the market size in lending is now roughly 83 million worth. So it's pretty interesting, and users are getting approximately from 2 to 4% earnings on their stable coins. So it's a nice service that people can use any part of the world. So we're very proud of it.
All right, we're excited to learn more.
Awesome. So just to start with the presentation and kind of like what I want to go through this presentation, a bit of like what I know you all have got introduced into the decentralized finance, but I just want to highlight a couple of important things, like from our perspective, what's important there. And also I want to share like how people are utilizing what we built, and in general in where the space is going through, and the network effects here. So in general, you have the access to decentralized finance, which basically means that from our user interface, you can access the Aave protocol. And in Aave protocol, you can deposit different kinds of stable coins, and one, for example, is DAI. And like, what of the interesting things about why people are using decentralized finance? Like, what's the value proposition compared to, for example, storing your funds in an exchange and participating in some kind of lending program, or even a local bank and so forth. So what's interesting is that it provides a non-custodial finance, which means that when you interact with DeFi, you are not giving up your funds. So compared to, for example, a centralized exchange where you're going and you're depositing funds, that basically means that from that moment, the exchange holds your funds. So that's like very crucial to understand. And similar way, if there is a lending kind of like a protocol or deposit scheme, if you do the same, you basically give up your funds. So you have to trust the other party to return them when you want to withdraw. And the idea, of course, like of the decentralized finance is that you don't have the issue. So you can basically interact with the protocols without giving up the custody. And something that's very interesting is that you're interacting with permissionless money. So when you have DAI or a DAI, which you get when you deposit into Aave as an interest-bearing DAI, it means that that money is basically yours. So what happens in some jurisdictions is that if the economy is going down, banks can, for example, restrict taking the money out of the banks and so forth to avoid capital flee. And what's interesting about like cryptographic money, such as, for example, Bitcoin or Ethereum or DAI, is that you actually it's difficult to do that way. So it's basically yours there at your wallet. And what I love personally about decentralized finance is that you have kind of a system that's auditable by anyone. So like, we don't know what's happening in the current financial system, right? So we're basically trusting everyone. Basically, we are trusting banks, we're trusting the financial markets with the information they give us. But in terms of like DeFi, all the information are public. Like every transaction, every loan, every deposit, everything's basically public. And that allows democratizing the interest rates in a way that you see what's actually happening in the market without any kind of like secrecy. And of course, this is in one way a privacy issue, but I think we're just in a state where the kind of like auditability is by default, and privacy can be added on top. And of course, like, coolest things, what I really love is that, like, in decentralized finance, the money is programmable. So one example is the DAI. So as you deposit DAI into Aave to earn interest, what you get is the DAI, and that DAI will increase straight in your wallet address, which basically means that it's algorithmically programmed in a way that it will credit whatever you are earning in the protocol straight to your wallet, and you can redirect that interest, use it, or whatever you want to do. And I think like that's like super cool thing. Yeah. So I in short, like I tweeted about this. I think it was J.K. Rowling, the author of the Harry Potters. She was asking in social media, like, what's basically like, can someone explain me what is Bitcoin? And I tried to explain that Bitcoin is money and Ether is programmable money. Just trying to be plain simple. And it was pretty funny because I got an answer from her that I don't want to program money. I barely work my TV. And this is amazing, like, response, because it shows like actually like all that programming and all that stuff, it has to happen in the back end. Like, we developers, we need to program so that you users can just use, right? So like, you don't want to program, for example, your channels on your TV. You basically just want to watch, I mean, or whatever you're using. So that's the kind of like a thing, like in DeFi, we try to give everything to the end user, but end of the day, like, it's just the users. So the easiest way to use, for example, Aave, is just holding a DAI or AUSDC or like a tokens, and those are like interest-bearing tokens that are increasing in value, in the value straight in your address all the time. So that's like example, like how end user could use something on Aave. But in essence, how does the system work? Like, how do we make it possible? So Aave, it's basically a protocol where you can create money markets, and by you, it's usually basically the developers or someone who wants to create a specific money market. Now we have two money markets. We have the main Aave money market, and then we have so-called Uniswap liquidity shares as collateral money market. But I will go into details a bit more. But to keep things simple, what is important to understand is that a money market is a reserve of assets. So basically, that reserve, you can deposit certain kinds of assets. So you can deposit, for example, in our main market, you can deposit DAI, you can deposit USDC, USDT, Ether, and a bunch of other collaterals, MKR, and so forth. And basically, once you deposit your assets there, you start to earn interest right away. And then at the same time, you have a credit line open. So basically, you deposit, let's say, ETH, let's say 2 ETH, you get a credit line of 1 ETH worth that you can basically borrow, for example, DAI or USDC and so forth. So it's kind of like a market for earning and depositing. Think as one reserve, as like basically one bank. And it's always like two-sided. So as you see the two pies here, what's happening here is that like 25, roughly 20% of the markets are actually borrowed. So, well, actually it's 25. So there's always like more depositors than there is borrowed funds. And the same way as, for example, people are depositing funds into banks, there's basically more people giving the money and earning interest than actually borrowing. And this means that you can actually withdraw the funds anytime at the moment, unless there's a scenario which is so-called bank run, where everyone is redeeming. And in that case, in that scenario, you still have the A tokens that you can trade on a secondary market. So that's the kind of like interesting thing. We also have explained that some of the borrowers are like they are utilizing this function called flash loan. So you basically borrow funds that are not utilized for one transaction without a collateral. So usually the collateral is a security that secures that you basically return your funds, and it's always like an asset that you deposit. And that's what makes the market so cool, because you come with one asset, you might borrow another one. But most of our users are just depositors, just regular users holding any kind of ERC20 that we accept, or stablecoin or ETH, and they just deposit to earn. It's that simple, and that's how it should be for the end user. So this is like the current market size roughly. Well, the data is a bit old. It's from yesterday, but still it's day before actually. It's still valid, and it really shows like kind of like the growth of how quickly we came. We launched into mainnet in January, so we have been live in 6 months, and the current market size is 82 billion USD dollar worth. And what's interesting here is that that all those reserves, all those like data on borrowing and lending, everything is public. Everything can be found on the Ethereum ledger, like who borrows, where it goes from. I mean, of course, addresses are pseudo-anonymous and so forth. And given that the privacy is important, but what's interesting here is that it's a number that you can trust. So that's like the auditable by anyone, like that I presented earlier, like why it's so important. Like when you are depositing something somewhere, like you're taking your DAI or your USDC or your USDT, and you're going into somewhere and depositing, and you see a number, like how can you trust that number? And the idea of DeFi is saying basically that actually you don't need to trust it, but everything is there in the blockchain. So that actual number exists based on the calculations done in the blockchain. So that is something that's immutable. And this is really, really important to understand, especially in our industry where there's a lot of exchanges, sort of kind of programs and everything, like, and you compare like things where you might have very high yield, and other side you have basically a number that you can trust, and you know that it's that data comes from blockchain and everything's secured that way. So that's very important. Like the end of the day, the interest rate isn't like the biggest thing. You also need to kind of like understand like what how much you want to trust in that term. So it's the security, because you want to get your funds back at some point. So that's a very interesting thing to keep in mind in finance in general. Yeah, so the market size is this. Mostly people are depositing stable coins. And stablecoin, as you most of you learned, it's basically a cryptographic form of dollars made in one technique or another technique, and that allows you basically to have non-volatile asset that you can move. And what Aave allows you to do is to get a bit more interest on when you're moving this asset. So currently, you're getting from 2 to 3 to 4%, depending on what you're depositing. The rates are a bit lower now. They were a bit higher a few months ago. Even we've seen 7 to 8% APR. So these are compounding interest. So they are accumulating all the time.
Stani, can we do a quick like take a few questions and do a little bit of a takeaway right now? Let's see. Yeah. Where is right, here we go. Share screen. So so you covered a few things, very interesting things. Okay, Aave offers you interest bearing DAI. That is when people deposit DAI into Aave. Okay, they then have ADAI, which is interest bearing stable coins. And where this happens, is that because Aave is a money market protocol that allows people to create money markets. A money market is where there's a reserve of assets where lending and borrowing happens. And two examples of money markets is the Aave money market and the Uniswap money market. Now, I think that people can understand the normal money market, which is what Aave is having, but something that is probably very unique and unfamiliar to a lot of people is the Uniswap money market and flash loans. Can you explain a little bit? Okay, what is a flash loan?
Yeah, definitely. So basically, as like how the whole protocol works is there's different functions, and the very easiest function is the deposit function. So as an end user, you don't see any functions. You just go somewhere and you deposit. So you go to aave.com and you basically use a function to deposit, and that's for you just clicking a button, right? But there's also a function of a flash loan that basically means that it's a function which says that if there is enough reserve in the pool, I can borrow, but in the condition that I need to return those funds and borrow without the collateral. So it's an exception of what we have. And what happens is that the user can borrow. Well, usually it's a developer creating some sort of like a functionality to some new application, and then basically, if that loan isn't returned, what happens is that any transaction that the user does in the between will fail. So one example of giving flash loan, I will give a bit more later, a bit more brief on that. But you could basically, you opened a you had ETH, and you opened a vault, let's say another vault or loan position in somewhere else, like other lending protocol, and then you borrowed DAI, and now you see that Maker system has DAI, which is in a lower percentage borrow, and you want to refinance, you want to change the loan, but you might already spend your DAI that you basically minted and borrowed. So what happens is that a developer could build a tool which takes a flash loan. When an end user clicks a button, what happens in the background, a flash loan is taken and in DAI returned into the lending protocol. The loan position is closed and the ETH is sent to Maker, and then a vault is open and DAI is minted, and then the DAI is returned to Aave. So basically you have a flash loan that basically refinances your loan, and then end user saves money. The end user, like the people who are depositing and using DeFi, they don't see anything like this happen. Everything happens in the background. So that's like the coolest thing.
That does sound really, really cool. I think that you have to see it, okay, to really understand it. Is that correct?
Yeah, I will go a brief example. Basically, what I said, but kind of like showing how it happens, like in terms of theory. But what's interesting there is that you could actually like we are relying on the, like, I don't want to go to technicals, but I want to explain this because like some of the technicalities excite a lot. And one of the things, we're relying on the atomicity on Ethereum. So how the blockchain works is that you have always a block and a block and a block and a block. So in one block you have transactions there, and one transaction has like sub transactions. So one transaction can be, hey, do this transaction, do this set of sub transactions, and here can be borrow flash loan from Aave, buy currency A from Uniswap for cheaper and sell it for higher in Kyber, return the flash loan and basically return the profit that I made from that trade to this address, send a small piece of profit to Vitalik, and basically send another piece to charity and send something to Stani, and then the transaction is over. So you can do like this kind of stuff. And if one of the transactions says, okay, that you are not returning the flash loan, so what happens is actually to do hold this thing was not even possible. So it basically reverts. So it kind of like didn't happen. So it's like a agreement that has been broken, and your sub agreements will basically die. And that's like the technical piece here. It's a technical stuff, but it's interesting to understand it on a higher level.
Great. I think you explained it actually really well. Okay. A lot of people are excited to actually see a live demo of it. I'm going to ask the audience to chill out. Okay. Be patient. Don't worry. Okay. There will be a live demo soon. Okay. Just want to cover. I want to ask you a question. So, this is something that you mentioned. Okay, that you launched your mainnet early this year, and to date there is about 82 million, okay, of assets currently in Aave. Is this something that you forecasted? Is this something that you expected to happen?
Well, we did expect like what we did like mostly is focus on the product itself. Like our goal was basically to create the best user experience and also kind of like make it easy for integrators, developers to use our technology and build other products for the DeFi users. So we didn't expect the amounts this big. We build the protocol in a way that kind of like we know that it could scale. And in terms of like getting so much traction so quickly,
Yep.
was a bit unexpected, I would say, honestly.
What do you actually forecasted? Can you just share? Okay, like what was considered? You would have been happy. What was that you forecasted like 6 months ago, and you would
I
have been happy with?
Yeah, I would say if you would have like 10 million in the protocol, we will be super happy. Like, and because now it's kind of like there's more and more funds, so we basically like I think in one way it's pretty good, but like I don't know, it's kind of like we're trying to get funds like as diversely as possible, because like to deposit to Aave, it's very easy. So you either go and do one thing, like one function, you first approve
Mhm.
and then you deposit, but then you can do even easier. You just buy somewhere the A token, which is basically usually the same as the underlying, let's say, a DAI is on the same value of the DAI, and then it starts to increase in your balance. So it's like becoming a Aave user is super simple in that way. So that's like what I think is kind of like a driving quite a lot of traction. Like,
So I think okay, one comment on from the users, okay, watching in right now, sums up what probably a lot of people also feel. You're hearing this for the first time. Again, don't worry. The reason why we organize this is so that you guys can become aware, and then you guys can actually do your research. But don't worry. I think I'm going to allow Stani to complete his presentation first, and then we can take and then run his demo, and then we can take more questions, okay, after the presentation. Sound good? All
yeah,
right.
go on.
Okay. All right. Back to you, Sunny.
Yeah. So oh yeah. So basically, a simple suite. Basically, you come to the protocol, you select what currency you have, and then you just basically deposit and earn. And of course, if you are a borrower and you need to borrow something, for example, let's say you are holding a large amount of basically Ethereum or wrapped Bitcoin, which we will hear more about tomorrow. Then you can, and you don't want to sell. What you can always do is you can deposit the funds. A credit line will be open, and you can borrow those stable coins, for example. So it's a nice way to get more liquidity without selling your holdings and long positions. And the new market that we open is basically because we believe in the idea that there should be like, there is not going to be one money market, but like, because each money market is a reserve. So all of these reserves, they kind of like have their own assets there, like, which has been chosen, and every like a reserve has their own risk reward scenario. So we can create assets like a money markets that has more riskier assets, or even less riskier assets, or money market which is basically there's only assets of tokenized real estates, for example, in the future, or tokenized something else. And the very first that we did, we basically created money market reserve of Uniswap liquidity shares. So Uniswap is this kind of like an liquidity pool, similar as for example, Kyber. So when you basically go there and you provide liquidity. So you provide a pair, for example, DAI Ether pair, and you earn trading fees. And what happens there is that when you deposit there and get those trading fees, you get a token, like a cryptographic token. And this token is basically represents your position there. So what happens is that you can take that token, come to the Uniswap market and deposit it as a collateral and borrow stable coins. And then you have more capital, and then you can do something else in DeFi. So it sounds pretty layered up, that basically everything is a token now in the DeFi space. But that's the cool part. It's kind of like having like kind of like the values obligations in real world. For example, you could basically when you deposit into your bank, you get a receipt, and you could use that receipt to guarantee something else, like a some other thing. And then like I consider this tokenizations and tokens just a receipt that can actually unlock receipt or a key that can unlock value somewhere, and you can use that in some other DeFi protocol. So this is why the whole DeFi space is super fascinating, especially if you have like a wallet, like Trust Wallet, and you basically can try different kinds of DeFi applications. That you will see like how like layered up things are and new things are coming. So that makes the finance very interesting, right? Yeah. So like why we are considering like the money markets, like why don't we have just like one money market in the future, and like all the assets is in the one particular thing? We see like money markets as like liquidity. Like the liquidity is the DeFi network effect. So when you are depositing your funds into Aave or Maker or whatever you're doing, you're basically providing liquidity. So we, the DeFi developers, we are basically trying to compete for your liquidity and reuse it somehow, and make the magic happen and get yields for you. And that's the kind of thing. And we believe like that there isn't like only one like big liquidity pool. I think there is like separate pools. Like for example, there might be a liquidity pool. I like to take the ocean comparison just as a bit of abstract, but also kind of like a show it, because like ocean connects everyone. It connects the whole world, but in the different places in the ocean, you have different kinds of currents, depths, and ecosystem. And I really see like the similar way that, for example, we might create completely new money market where collaterals can be used, for example, real estate from Southeast Asia, and basically then you can deposit there stable coins and earn interest when you, for example, die. And what happens is that those collateral tokens are basically securing the system that there is enough value that basically the borrowers are returning their loans. And a similar way I see the money market ecosystem, and you might have different places with different peculiarities, like what kind of assets there should be and the depositing. So everything should be adjusted in the local settings. And where I come from, for example, Finland, we always say that Finland is land of thousands of lakes. And I see also kind of like tendency that at some point, like we have also money markets that are like private ones. So it might be local private money markets where basically there's peculiarities how you can join them and so forth. There might be even like a KYC money markets where if there's more regulation coming into the space. So we kind of are prepping up for that. So that's like, it's an interesting comparison, but it just shows like liquidity, which is basically your deposits. It's kind of like an ocean, but in this ocean, like there's different basins and different like yields and risks and rewards, and you can choose yourself. So what's different like from previous is that instead of like being able you're locally, you can access all of this, but then you can choose what you're accessing. So it's kind of very interesting stuff. But here's the thing. So yeah, there isn't many lending protocols out there. So when you're depositing, you should always like look how much assets is deposited into the protocol. So how much the smart contracts are holding. So in compared to like banks or centralized finance, like usually they lend out the funds. So they're like basically they don't exit their balance sheets, but they're exiting their system. And when everyone wants their money out, the lending facility needs to ask them out. But in most cases, those funds are in DeFi are in the smart contracts itself. So that's like very important stuff. And Aave, like we launched in January, and we have had like pretty nice growth so far that we covered a moment ago. And this is pretty cool graphs showing like the amount of borrowers and depositors. And it basically shows like how much our system is basically adopted. And this is like very good example, like how you can like spin up very well like your DeFi project in general, but also kind of like how you get a network effect from the users and depositing funds there. And like there's different reasons. I asked on Twitter, like, why are you using Aave? Like I wanted to really like get like, because I know we have a lot of users there in Twitter and based on the questions that I get asked all the time. So one of the example was that I just want to earn interest on my DAI, and that's basically it. And that's like pretty big example in terms of like most of the depositors, they just want to earn, and that's like the key thing. And there are parts in the world where banks are charging for local currencies negative interest rates. So here we have an example where they use DeFi, they use Aave to not get charged and earn more. So that's interesting stuff. And also you have an access to 24/7 industry leading yield. So what's interesting about, like, I think there was a question about how the rates as well are formed and yields and so forth. So basically the money market itself is algorithmic. That basically means that there is mathematics doing all the heavy lifting, and it's based on supply and demand. When there's more demand for the stable coins, the interest goes up. When there's less demand or more supply, the interest rates goes down. So that's like pretty cool. So let's say that when the interest rates are down, it attracts sort of borrowers, and when the rates are up, it attracts more depositors. So it's this kind of like very market economic way of supplying of supply and demand. So that's pretty cool, and the rates are accessible 24/7. So that's comparing to traditional finance. It might not be that same everywhere. So that's pretty interesting stuff. And I think this is a good example that you have direct access to money markets. So it's permissionless, censorship resistant. So no one basically stops you doing that, and creates you passive income. But also what this tweet highlights is that it gives you the possibility to access instant liquidity when you need it. So when you deposit your stable coins, you might be, or your ETH, or what is the currency, you might be in a situation where you want to borrow something. So you have the credit line, so you want to borrow something. So you deposit ETH, you're earning interest, but then again you want to borrow, let's say, DAI, and convert that DAI to your local currency and shop around, or whatever is the reason. So that's pretty interesting. And of course, Blazar is a project that is built on top of Aave. So what we are doing for them, they're getting access to short-term and flexible deposits and borrowing facilities. So that's like a pretty interesting example. And of course, like, our memes are pretty great, according to one Twitter user. So that's part of the kind of like a culture. So I mean, we are creating like new finance in general, and because you don't need to trust us that much, because you're trusting the code and how it executes, and it's on the blockchain. So blockchain-based code is different, where compared to traditional finance, where you have to show it to be like a conservative, reputable, but here like code is doing all that proofs. And when you're creating something new, you can basically utilize memeing, and you can make fun out of it. So that's pretty nice. So everyone has like some reason to deposit, and that's like, or borrow, or use our technology, and like, we're super happy that there's diversity, and that's pretty cool thing. So about the flash loans, one thing I wanted to show you, like, how network effects, or how things are built on DeFi in general. And like, so I was brainstorming with Mariano Conti, who is a developer in MakerDAO, and on flash loans and MakerDAO vaults, and basically in MakerDAO you have multiple different vault types. So you can open a vault with BAT as a collateral, or WBTC as a collateral, or for example ETH. So I was asking, like, how I could, for example, close my WBTC vault and open a ETH vault without actually repaying the DAI. And we came you to the conclusion that you can't actually do that. So you need to repay the vault and open a new one. And we came to the conclusion that actually you could use flash loans to do that. So the user doesn't need to repay the loan and then close the vault and open a new one. And then I asked someone, like, could someone build this thing? So I asked, like, is there a developer who could actually create this kind of like a product? Because I would use it, and I'm sure many others will want to do it. So then David came from the community, and he said after 4 days that okay, it's done, and here's the code and here's the link. So it's collateralswap.com, and what it allows you to do it in his first version is that you can swap your collateral like from BAT to ETH without returning the loan. And in the background, what happened here is that David is a developer, and Fiona came basically in Twitter, and she actually tried it. So she is not a developer, and she tried the system. So you see like a network effect of actually developer creating completely new product for the end user, and Fiona tried it. So what happens here is that you get a ETH loan from well, actually it goes a bit differently than it's explained. You basically borrow you borrow you get an ETH loan, you exchange it to no. What it happens here is that you get the DAI loan, you close your vault, you get your BAT, you sell the BAT in Kyber into ETH, and then deposit the ETH back to Maker, and then you get DAI, and then you return the DAI flash loan back to Aave. So what's funny here is that like you have all this kind of like composability using 3 different DeFi application, and then like everything happens like in the background. So basically when Fiona does it, she just clicks one button and it happens, and that's basically because David built it and because there's flash loans. So think of like DeFi as a banking system where everyone works together, and that's why you're getting good yields. That's why you're getting like basically efficiency, and you can move funds from one place to another, and so forth. So that's like the cool thing here, like the network effect. And in terms of like composability on and like how we work with different protocols, so there's like different, like we call this like the Aave family, because there's like so many projects that has been integrating Aave or A tokens, and allows you either to deposit straight away from a wallet. So I think you can do it straight away from Trust Wallet, EM token, Alpha Wallet, and what else we have here? We have different platforms. My Ether wallet is you can deposit there as well and earn. And also some places like exchanges, you can actually exchange into A tokens, for example, ADAI. So you don't need to even deposit. That's like the easiest way to start earning. Yeah, so that's very interesting network we have. Yeah, so the flash loans itself, it's very interesting as a concept because some of them are pretty big. Like some do borrow like 500,000, 200,000, and like the thing is with flash loans, you can borrow any amount that is there in reserve, so you don't need to have that amount at your possession, and that makes like you can build things which are pretty interesting. And we then, when someone builds something, we as an end user are using it. So these big flash loans, I was wondering like what are they? They went to DeFi Saver when I was reading the blockchain. And what basically happened here is that DeFi Saver allows you to close your CDP, so make your CDP before it gets liquidated, so you save the liquidation discount. And what DeFi Saver was doing is they created a new product with the flash loan, so you could actually pre-leverage your CDP. So instead of opening a CDP of like 500,000, or let's say even like small CDPs like 100 Ether, or like let's say 1 Ether, you could basically with one click you can open a CDP with 1.8 Ether, and it does it because you open a CDP, and the next thing you do, you take that DAI and buy in the background more ETH and put it back to the maker, and you do this kind of like round as much as you can, and you basically have a very big exposure into ETH. It's very like trading functionality, but it's just to show like how people are utilizing these different things. And when I started in DeFi space, I definitely loved finance and all kinds of stuff, but I'm also like a person of simplicity, and I started off very simple things, and didn't go much into details. But as I got more interested, involved, and the space grew, I started to do more complex, like super user stuff. And it probably will happen to some of you as well. Like you start by depositing, earning, then you want to try something else, and then you notice that actually like it's kind of like gamified experience of banking, and it's much fun to do. So yeah, since we launched, we have gotten like very good basically traction, and people really love, especially like that we launched the Uniswap marketplace, and also like we're getting closer to 100 million locked value in the smart contract. So like I think that's because like it's super easy to deposit and to actually hold A tokens, and yeah, and we are trying to innovate all the time. So I think that's something that brought us here in the first place. Now, like when we think about the ADI itself, so this is like the fun part, because this is like so simple. It's so cool. So when you deposit and you get let's say one DAI, you get one ADI. So you get the algorithmic interest right away. So you're let's say if you deposit one DAI and it's tomorrow 1.2 DAI, you can ADI, you can claim that 1.2 DAI with the 1.2 ADI from the protocol. So that's like very interesting thing. And what it allows you to do is that it's basically USD inflation mitigated savings account with automated treasury management. So in layman's terms, what it means is that you have a currency at your hand, ADI, which basically generates interest. So it fights the inflation that you have in the dollar, and also it basically automatically is managing your treasury. So it's automated investment. So think about like a currency that's actually is like increasing in terms of value all the time. So like if you take a note from your pocket, you basically have a currency that is going down in value because of the inflation. And with ADI, you basically have the reverse effect. So that's like the crazy cool part here. And inflation is pretty difficult thing, because in some countries it's higher than other ones. And what the A tokens allow us to do is that, especially it might be very applicable to Asia, is that if you have in local currency in inflation worth of, let's say, 3%, that means that your note loses value 3% annual basis. But if you're holding, let's say, ADI that basically has a API of 4%, it means that you're basically only losing whatever is the dollar inflation, and you're actually earning the rest. So in terms of like economically speaking, so that's very important stuff to kind of like realize, and that's like very cool part. So like the smartest thing to do in terms of like savings is in my opinion, is to hold interest bearing like currencies, like tokens. So that's pretty neat. One thing that we're doing is also like, when this is not live, but this is something that we want to pursue in the long term. So when A deposits it to Aave, like A has a credit line, so you can borrow, let's say, DAI. And what we want to do is that if A can draw USDC or DAI in for 3 to 4% APR annually. So instead of that, A makes a legal agreement with B to draw the credit line. And what happens is that you are using DeFi to generate low-cost funding for access to finance. So let's say if your friends are not into DeFi that much, and you have deposited into Aave and you have credit line, you can make an agreement with your friends or just either like or a business partner. So basically, what happens is that you are letting someone else to use the credit either for free or for a charge, premium or something, without a collateral. So actually, the DeFi is a nice way to actually get the liquidity into the normal finance. and it's something that is still ongoing work, but it's interesting to see like how this will evolve in the future, and it might have very good network effects. And where you can create this kind of like a trust networks, I mean, everywhere locally, local communities, and between institutions. I mean, this is a very nice way to get liquidity from other places than normal lenders or banks and so forth. Yeah, and it's important because interest rates vary. Like these are inflation adjusted. The more darker area, the more higher the rates are. So there is some dark spots in Southeast Asia as well in terms of like interest rates. So like that might be a way to get them more down. Yeah, I think. Jason, do you want to ask at this point? There's a couple slides still left, or?
I think that because you said that there's a couple more slides. Okay, why not you go ahead and complete it, and then we'll at one shoot we'll answer all the people's questions.
Okay, that's good. So, like, one of the important thing about Aave is the governance. So, when we create the money markets, and because our protocol is decentralized, we don't want to have the power over the protocol, and we want that basically the community members have the power to regulate what kind of policies are changed in the protocols or rules and so forth. So, we have this kind of like Lend-based governance that we're planning. So Lend is our native token that we are burning with the fees, but we want to actually take that token and use it to basically secure our protocol. So what happens is that when you have Lend, you can stake it into the protocol against incentives. So basically you earn a bit of minted inflation and part of the fees that we collect from the protocol. And in case there's a so-called insurance event, so if something happens in the protocol, there's a bug or something, and people lose funds, basically those staked yields could be staked funds in the pool could be used to compensate any losses. And if that particular pool staked funds is not enough, there's basically also the kind of like auction minting inflation. So that much is covered by auctioning newly minted Lend tokens. And it's kind of like a two-tier system. And also we have third tier, which is basically built-in backstop. So you can also stake stable coins in a way that those are both when there's staked Lend that is basically slashed, so it's sold or sold by in minting inflation auction. The backstop basically buys it from the market for a lockup period, so that there isn't Lend that is going into the market. So that's like pretty cool stuff that we are working upon. But we're basically announcing a governance paper called Aavenomics pretty soon. So there's more detailed on this. So the idea is here that as the protocol grows and there's more and more money markets, there's more and more risk. So we want to incentivize then the whole token holders to actually secure and ensure that risk, and that basically inflation fee sharing will be the pricing to incentivize people to do that. So that's pretty cool stuff. Yeah, so the next thing, we're launching a new money market with set tokens. Not going to pretty much details, but set tokens are basically a basket of your holdings on Ethereum, and basically they tokenize those holdings, and then you can use them in the same way we have the Uniswap market on Aave. So that's like pretty cool stuff. Yeah, I mean, Aave is a team of 17 individuals. Mostly we are heavily focused on developers, and been building for a few years smart contract based systems, and we're also known kind of like the Avengers. And if you want to join our Telegram, here's a QR code, and if you want to chat there. Yeah, otherwise this is pretty much the presentation.
All right, thank you so much, okay, Stani, for giving us, okay, this really cool introduction, okay, to Aave. Now let's cover a few more takeaways, and we go into some question and answers before you you would still do a demo. Is that correct after this?
Yeah, exactly.
All right. Okay. So let's do a quick recap. Okay. So here are some things that you can do with Aave. Oh, sorry. Okay. I got the animation all wrong. Okay. Everything just basically showed at one go. All right. So the first thing you can do is that you can deposit DAI into Aave, and you will receive an interest-bearing DAI because your DAI is actually providing liquidities to be part of to create money markets. And the benefit is that now with a DAI, you have a price stable, coin, softly pegged to the US dollar, but actually gives you return. Is that correct, Stani?
Mhm.
Right.
Exactly.
And then
Yeah.
another thing that you can do with Aave is that you can do credit delegation, which means that you deposit ETH, you get the credit facility, and then you provide liquidity to the normal financial, to your friends, or etc. etc. That's another way that you can actually do. Is that also correct?
Exactly.
And a third thing, okay, that you hope that Aave, that people would actually do is that they would take what is available at Aave and provide financing to the dark spots, okay, which you showed in the world map. Is that correct?
Yeah, exactly.
And last but not least, okay, but I think this one's a little bit unclear, and I think some people are. Can people actually participate in the governance right now? Is Aave right now a company, or is it a DAO?
So basically, we are now. So we built the technology is basically ready in terms of like the first iteration of the protocol. In terms of the DAO, we're in transition period. So we have the DAO smart contract itself is pretty much ready and audited by consensus diligence. So our next step is basically to transition into a DAO, and then when it's a DAO, which happens in couple of months, what happens is that all the decision making is done by the LEND token holders. So they are governing the protocol. They're governing what kind of assets can be added, what kind of money markets can be created, and basically they decide on the incentives as well in the protocol.
Sorry, I'm just liking some of the comments, okay, in the thing already. But okay, let's, because the questions, okay, come in. There's a lot of questions that already come in already. Let's try to go and answer some of them.
Sure. Yeah.
I think the first question that how does the number of ADAI change directly in the user's wallet? So imagine if I have ADAI right now, okay, does my ADAI balance just automatically increase? So how does the interface, or will we see that later during the demo? Then we keep this question for
Yeah.
later.
Yeah, we will see. But the cool part is that it's totally automatic. So the way tokens are built, you can basically build any kind of functionality because tokens are just like representations of what you have in a smart contract. So it's algorithmically built. So we have a mathematical formula in the A tokens that basically states that whatever is accrued, like the interest rates with given the formulas in the Aave protocol, basically credit that with this algorithm to the token holders based on this mapping that we have in the smart contract. So it's really that simple. There is nothing else into that, and that allows us to basically ensure that if you want to benefit from the Aave protocol, you just basically obtain A tokens anywhere, like any place you get A tokens, you basically are depositing to Aave.
All
That's
right.
so cool.
Another question from the audience is, are ADAI currently supported in any debit cards?
I think we're working now with a company called Monolith, so they're adding there, but they're in Europe. In terms of also there is a company called Ado. They provide Europe. I don't know how much like in Southeast Asia. I really love to have a partner here as well, so that basically this could be happen and you could spend because like you could also spend only your interest. So definitely like that's something that we're looking into, and that's like the way to get people more spending your interest in real life.
Okay. Is the interest accrued daily?
Every second, so every second it's accrued. So every second, and basically depending on what wallet you have, Trust Wallet or MetaMask, the interest rate, the wallet fetches the kind of like the makes the calls in certain threshold. I think Trust Wallet does it every few seconds, and you basically see every few seconds your balance increase.
Currently, okay, so there's a question: is the code audited, built on Solidity?
Yeah, code is audited, built on Solidity, audited by Trails of Bits and Open Zeppelin. And our latest audit. So when we create always a new money market, what happens is that we're actually not creating that much new code. So we are using the same infrastructure and we're just replicating it to a new money market. And in this case, we created the Uniswap money market. So the only component we changed there is the price feed provider, so where the price comes, and that's been audited by Consensus Diligence. So we have a partnership with Consensus Diligence, so they basically help us also kind of like to review the infrastructure that we are building. And also they're doing now this kind of like mathematical verifications of our protocol and interesting like testing, so it's such as fuzzing and there's like so many components there. And as we're growing as a protocol, like diligence and security is something that we have to put more and more effort.
Okay, all right. I think I've read the other questions. I feel that the questions are best answered after the demo. So shall we move on to the next the next part? What have you prepared for us? Let's see.
I will basically, I need to change the screen sharing just a second.
Yeah, sure. Very good questions, everyone. Okay, keep the questions coming in. Okay, we still have 49 minutes together. All right, so we'll do our best to answer all your questions and make full use of the opportunity that we have speaking with Stani today.
Okay, let me see. Yeah, so so you see my screen, right? On the
Yes, everybody can see your screen.
Perfect. So it's quite a simple. So when you go to aave.com, you basically then you can access to the app. So this is the interface of the app. So when you land here, so here's the money market, and here's different cards with the cards.
Is that your wallet balance amount, 83 million? Is that your wallet balance?
Well, I hope it will be.
Okay, sorry, that was a joke. No, it's not the wallet balance.
So, but definitely, this is the current market size. So that's like that's the interesting parts, and your wallet you will see basically from the upper corner. And what's cool part, of course, you can have a dark mode here. Yeah, that's pretty interesting stuff. But yeah, so here you can change the different markets that we have. So this is the market, and in the main market you basically can deposit different assets and just start earning. So you could do it even here. You just go to deposit, and here I have a wallet balances. So I have 500 DAI here, and I have 2 Ether, and then I have a bit of USDC. So now I see that, okay, so if I deposit the DAI, I will get 2.27 on annual basis. So what I will do now is basically I will deposit, let's say, 350 DAI, and I will continue. So when you're dealing with tokens, you basically always have one extra transaction which is approved, which means that you let the smart contract to approve of the usage. So we're going to do quickly that. And I'm using, you can use multiple different wallets. You can use Trust, Coinbase, and I'm using MetaMask, so it's loading for me now. You, by the way, see the MetaMask screen as well, or you see only the app?
Let's see. Do we see the MetaMask screen? No, we don't see the MetaMask screen.
Okay, no worries. So what I'm doing in the background, because it's MetaMask is a pop-up screen. So I'm just using MetaMask, and I am basically selecting some gas features here. So I'm going to do it with the fast. So as you recently were introduced, like, and you had a questions about the gas system. So normally the gas is pretty low on Ethereum, but when there is like a lot of traffic and action going, what's happens is that the demand of the transactions spikes the gas up, and then you're paying more gas. So it's always good to take into consideration like how much you're spending. So I confirmed the MetaMask approve function, and basically now what happens in the background, there's something that as to use it you don't need to know, but it's good to know, is that basically I'm sending a approved transaction into the smart contract saying that, okay, you can access my wallet and spend the funds if I choose to do so. So that's like the interesting part here in the background. There's some information about the reserve that I'm depositing. So we have a DAI reserve, and the utilization rate here is 44%.
Wow, okay. That's pretty liquid.
Yeah, and the approved transaction was confirmed. Now I'm ready to deposit. Now I told the smart contract that you can spend my funds if I will deposit.
I mean, compared to other banks, right? Okay, currently, how much do they need? What is the percentage they need to actually hold in reserve in order to lend money out?
It really depends on the jurisdiction, but
it's pretty low, right?
Yeah, and the thing is, because
no, I'm just being naughty. I'm just poking.
Many people just hold fund, and less people are. Yeah, exactly. Yeah, but it's an interesting question in terms of like the how much banks are holding funds. Like people don't like this reserve, like it's a 44 in utilization rate. It could be even like 90, and like there wouldn't be that many people who are actually actively changing their taking money out, and like kind of like it's usually there. Like that's the normal situation. And yeah, so that's the utilization rate, and it also like basically tells like what's the available liquidity there if I would choose to borrow. And now the transaction is confirmed, so it was pretty quick. So it for me it took 2 functions, and when you do next time, it's just 1 function for you. Or if you deposit Ethereum, it's just 1 function. And I already started to earn basically. So do you see?
Yes.
You will see this a DAI balance change. So that's like the magical part. And I could actually check something cool. Let me see. Okay, so I will actually show you this also from Etherscan. This is my MetaMask. This small MetaMask screen.
No, we can't see your MetaMask screen. However, this is very interesting because how is it that the interest is because in Ethereum, okay, every time that there is an exchange of funds transaction, that's a transaction, it requires gas fees. How is this possible? I this is something maybe for me as a non-technical person, I don't understand how this is possible that I could actually see these
Yeah, it's interesting because we have an algorithm that basically updates the balance of the token. So in the same way, when you're querying like an Ethereum address, for example, what is the balance of address? What happens is that you don't need to do a transaction. You can always query like what's the balance. And we're doing the very same. And when the kind of like a balance of the ADA is triggered, the algorithm is triggered to calculate the current balance, because the mathematics is there and they're not changing, and they're based on the interest rate, which are not changing. I mean, the formulas that are not changing. It basically calculates how much is credited to you, and that's
right.
Cool stuff.
Okay. So it's not yet in my wallet per se. This is just an interface that is calculating. No. Okay.
It's actually in your wallet. Let me go with the same screen to make it easier to share. I'm going now to the.
Sure.
So now do you see Etherscan, right?
Not yet. All right, there we go.
Okay, good. So here's the same address, and I see here is the Aave interest-bearing token ADA, and you see like it's 250 that I deposited, and it's already started to increase 162 in decimals the rate. And if I press it to see like the actual balance, so what's interesting here is to see is that this actually all the time accrued. So we have now this amount of like in ERC20s, there's quite a lot of this kind of like interesting interest-bearing functionalities. Oh, sorry. So what's interesting here is that I update this, and the amount will change. Let's see. Maybe you have to wait a bit few minutes. Maybe I will show you somehow if I share my like my whole screen. You should be able to see the data mask. Let me do that, because that will be really useful to see. Like then you actually see like how it's in your bar. Give me just a few seconds. I will share the whole screen, and that will be pretty epic. So entire screen. Okay, so I need to close a couple of tabs.
Okay,
Just kidding.
I think during this intermission, there's one question that people are dying to find out. Okay, which is, let me look for it. That's the question. Where's Ren?
Oh, that's a good one. Yeah, I love Ren. Ren is very. I mean, it's very interesting project. Like we do have like WBTC, but Ren is something I'm personally very interesting. I've been following that quite a while, and I'm expecting that what we are waiting for in terms of Ren, that the protocol gets more mature, and over time, then we're able to basically add not just Ren, but also the Ren assets such as the Ren BTC. So that's something that we're looking into. Yeah, I found so here I have my balance. Of course, the thing is that the MetaMask only shows the three first decimals here. So that's kind of like a thing. But if we will go back to the
Etherscan?
other, yeah, Etherscan, basically we will see the, let me do this. But you see my whole screen, right? So you should see now. Okay, good.
Yeah.
So we have this. This is the balance now.
Then
we update it. Did you see it? Change it. So it was 340 something, and now
we saw the change.
So it's not just a user interface gimmick. It's actually like the token is like that. So basically, imagine you're having like this kind of like account, which is whatever you hold it basically increases balance, and that amount, not just the 250 that you deposited, but also like the what you earned, you can basically withdraw from the Aave protocol. So that's actually everything is convertible to DAI, and that's like the beauty. That's the beauty
of the protocol.
Yeah,
that's the beauty of your protocol.
Yeah.
Very cool.
And that's interesting part is that you don't even need to deposit. You just buy the ADI from somewhere, and then you have it, and that's like cool stuff. But I would always use the interface if you're a beginner. But it's like the depositing is super easy. So I mean, like when you land into the site, everything's super.
This is Aave.com. Okay, got it.
Yeah, and you can basically take the main market. You have the DAI, deposit it, and you start to earn like whatever. You will have a giveaway of a DAI as well, but also the DAI that you will have or anything you can basically deposit and earn as well. So it's that simple. There's nothing else, no trickiness. It's just super easy.
Cool. Someone asked, okay, can you demo it with Uniswap Market? Is it different? Is there anything different with the Uniswap market?
Yeah, it's pretty. Uniswap market is pretty same. So I don't have the Uniswap liquidity tokens. I could get them by going to Uniswap, but it takes a bit couple of extra transactions.
Right.
But what's interesting here is that, for example, if you're providing liquidity into Uniswap Unidai ETH, what you basically do is you take that token, and if you have it in your wallet balance, it recognizes, and you deposit the Unidai. And then once you deposit, you have a dashboard, and you can basically borrow against stablecoin. So the process is exactly the same. Just make sure that you have the Uni tokens version 1 in your balance, and then we're later adding version 2 as well.
Oh, okay. Right now it only supports version 1, not version 2. Okay.
Exactly. Because whenever we add something, there's always like this kind of like a risk process. So we need to be really, really careful on the stuff that we are adding. So
okay.
like we always, like the same thing with Ren. Like we love the project a lot, and we just need to see it more on the mainnet. And once it's like it has been battle tested, then we can basically add it.
Got it. All right. So that's the answer, okay, to you guys. It needs to be battle tested first.
Yeah, exactly. So security is the paramount always.
What are we looking at here right now?
Excuse me?
What are we looking at right now? What's Aave Watch?
So Aave Watch, this is made by our community member. So basically here you can see the total liquidity, which is now 83 million. Doesn't count the Uniswap yet. And basically this is the borrowed amount. So roughly 18% now is borrowed. 82 is available for borrowing. So even this is basically even available for flash borrowing. And then there's different kinds of rates you can borrow, like variable rate or stable rate, which basically locks you in a rate. And here's different assets. So what you can deposit and how much you can earn. So let's say you deposit MKR, you are earning 1.16%. You're depositing ETH 0.16. Those are used mostly as a collateral, so the rates are lower, but the stable rates are quite high. So you can get BUSD for almost 4%, USDT. 1 month average, for example, here is 5.5, USDC 3.6, DAI you can get now it's 2 to 27 and so forth. And like a few months ago, the rates were way higher, like from 7% and up. So it's pretty neat way to actually what I love about the interest rates is that you can mitigate the amount of gas you're using. So if you're spending money on gas, like holding a token basically means that you have income that you can use to pay all your gas. So that's pretty nice.
Okay. Very cool. I think people are excited to see a demo of a flash loan. Is that possible right now?
Flash loan demo, I think basically what you can do is try it. Collateral swap is one place where you can do flash loan, but basically in terms of functionality, I don't have anything here that I could present. But this is just an example of what one of our community developers, David, did. So you can choose a platform like and then you can swap your collateral from BAT to ETH, and then so. But you have to have the vault open. So if you have a vault, that's one thing. And then the another thing is the DeFi saver. So DeFi saver allows you to close your CDP. And what's interesting here is that they use flash loans in the background. So when you close a CDP without returning DAI, they basically take the DAI as a flash loan from Aave, close the CDP, sell the Ether, return the flash loan to Aave and DAI, and return you whatever is left, basically. And it's kind of like a way to manage risk. So it's just an example what you what uses. So flash loans are like functionality and the behind of the scene. But there's in Twitter like good examples where people has done flash loans, and I can send you guys if you want, those who are interested, because it's a nice functionality.
Okay, so I think a very important question to ask when it comes to flash loans is that is there any like documentation or like a step-by-step guide that you can uh, show to us, okay, that we can get that people can go back and read after this session before actually, giving it a try?
Yeah, definitely. We have a developer's documentation. Somehow the docs page isn't working. I think these things happens always like when there is a presentation or something.
Yes, exactly. Yes. It always happens, okay, during the moment of truth. Yes.
Yeah, but it's so basically, if you go to maybe give it some time,
Mm-hmm.
go to the docs.aave.com. Basically, you have a developer's documentation, and there's actually an example tutorial how to implement flash loans. And if you're interested in that, I really, and a developer, I really recommend you to do that. What happens is that you can actually create different kinds of products. So flash loans can be very complex. So one example is that you could do a flash loan. For example, if you have a loan in a vault in MakerDAO, you have ETH there, and you mint a DAI, and you're paying some amount of in the interest in terms of like let's say that now the interest in DAI system will be like 4. So what you could do is that and let's say at the given moment USDC will be lower in Aave. What you could do is you could take a flash loan from Aave in DAI, close the MakerDAO CDP, take the Ether, sell it in Kyber, back basically back to well, actually, you take the Ether, you deposit it into Aave, and or you can actually sell it to something else. If you want to change your position, you can buy Maker instead and deposit Maker into Aave protocol, and then basically you can print, not print, but you can borrow USDC, and this basically with a lower rate. So basically, it means that you actually did a collateral swap. You swapped your collateral from ETH to Maker, and then you made a interest rate swap. You swapped lower interest from DAI to USDC. Now they're reverse rates, but and then you swap your lending currency from DAI to USDC. So you can do a whole bunch of cool things, like with the flash loan, in terms of like, and as a developer, you create this kind of like functionality, put a front end into it, and then let other people to use it. And that's basically what the DeFi saver is.
Cool. All right.
So
Okay.
yeah.
If that's the end of the demo, okay, let's take one final round, okay, of ask Stani any questions. Okay. I think, okay, let's begin with so there's a question, okay, about
Mhm.
there's a question about Aave liquidations. What is that?
So liquidation is a system where basically because the collaterals, they change in value, so it's important that the borrowers, they have enough collateral there. But if the system is under collateralized, what happens is that liquidators are coming in play, and basically they will liquidate those loans. So they take the collateral. They give the borrowing currency, whether it's a DAI, USDC, they put back into the protocol. They take the collateral and resell it in the market for back to their own collateral. So they liquidators and liquidations is a way to secure the protocol so that there is no deficit.
Okay. All right. Another question. What is the relation between the interest rates and utilization rate of the specific reserve?
Excuse me, the utilization rate and
What is the relationship between the interest rate and the utilization? Do you understand this question? Or do
yeah,
we
definitely. So basically, the more the vault gets utilized, the higher the interest rates become, because it means that more people are basically consuming the liquidity. So that's basically, it's kind of like supply and demand curve. Well, actually, the curve looks like this, and this is like 100%. This is like 0. So this is how you earn as the utilization goes up, and once it's close to 100%, it spikes, so that there's like uh, the spike is the reason that basically you will not have 100% of utilization, and then introduces more capital into the system.
Follow-up question: is it linear or exponential?
Basically, it's linear, but it has an exponential function, so it goes like this and then up. In roughly, our sweet spot is in 90%. So once the 90% of the utilization is done, what happens is that there is a spike.
Okay.
That's a good question.
One question, okay, from Alco. How are developers incentivized? Are there plans to introduce a governance token? I think this relates to currently, like, are there like jobs, I suppose? Are there
Yeah,
bounties?
so in terms of in terms of like governance and that kind of stuff. So currently, like integrators who are developing things, they basically are implementing referral code, which automatically distributes them referrals. What we want to do is that whoever integrates Aave and basically is part of, it could be part of the governance system. So basically, they're accumulating tokens that they can use to vote and govern like how the protocol in the future will be governed. So that's something that we're doing. In terms of the what you can build, we have a grants program that you can actually participate in. So if you have some interesting thing in mind that you want to build, always giving out grants. We have run the program over 2 months now, and we have over 14 different grants. So I will share it with you for further sharing. So that's
Okay.
some I'm interested in. And of course, we're interested in different kinds of language translations and creating local communities. So, like whatever is your thing, reach our team out, and that's pretty cool stuff. And of course, we're always hiring developers. I mean, we are building very mission critical software, and that's the profiles we're looking. And I mean, it's at the end of the day, like we are a community-based project, so we are always looking everything from the community. So that's like
Mhm.
one of our things.
You mentioned, okay, that right now you are transitioning into a DAO. Okay.
Yeah,
Are you building from ground up your DAO, or are you using a platform like Aragon or DAO Stack for that purpose?
yeah. We kind of started with DAO but we ended up basically creating our own system because there was functionalities that we wanted to have, and kind of
Mm,
like that it fits the needs that we have. But like the DAOs are pretty interesting in a ways that they're pretty uh, simple in a way. Like we want to have as simple as possible to make it understandable. Like
yeah.
even person that doesn't understand code, that they can read in the comments and understand like what kind of functionalities there are. But
Hmm.
I highly recommend to use something that also is out there. Like DAO Stack is pretty good for that.
Hmm.
Aragon is pretty nice. Their user interface isn't the best one, but it's a functional DAO system, so it's not bad. For example, either. I mean, we use them both as well.
I can't find the question, but I think that somebody asked a good question about flash loan and gas fees. Okay, is the network congestion a challenge? Okay, to actually executing a flash loan.
Yeah, I mean, it's not a problem to execute, but it might be an issue on what you're basically trying to achieve. For example, if you're using flash loans to arbitrage, so you're trying to profit from price inefficiencies. In that case, flash loans, like your profit from the arbitrage has to be higher than the flash loan fee plus the gas that you're spending on those transactions. So definitely it's, but in terms of like execution, it's not that issue. It's just like it's just more expensive like now because of the gas prices.
Is Vitalik listening to us now? I don't know. Um, okay. What do you think of Opin?
I think it's
Have you?
interesting. Okay, I'm still looking. It's kind of like still the early stage, so I'm very keen to see. Like, there's now good tendency of the options platform. There is Oh My DeFi. There, it's a pretty interesting team as well. They hacked in Eat Denver, so basically they made a way to do like options and also kind of like physical delivered. And what they did like very nicely is that their latest hack on the hack money was basically that when you write out an option, you also deposit that collateral of the option into Aave, which gives more yield into the option writer and also cheaper price for the option utilization. So that's like very good way how you can actually utilize the DeFi composability and earn yields. And also Open is a very interesting project. Like their aim is to secure basically also like the lending interests in the DeFi, and we're talking with them as well. Then there's also Hedgic. They have had like a rough path with all the issues, code deployments, but I think the space is for options is coming nicely together, and can't wait to see like what's going on in a few months.
Okay, two more questions. Okay. I think this next question is a very important one. It's concerning on risk. Okay, the risk on when it comes to crypto lending. So I think that this is an important question. What do you think? Okay, of uh, smart hacks? Okay, like the recent DeFi hacks, particularly the BZSEX flash loan. Can you briefly explain what you think happened? What can we learn from that?
Yeah. So what basically in the flash loan hacks happened is that what happened is the attacker took a flash loan and with that very big amount and manipulated the price in the Uniswap, and one of the platforms was using Kyber price feed that was routing orders through Uniswap, and then basically there was a kind of like exposure that they had, and the attacker was managed to steal a lot of amount of value. And there's other kind of hacks there's has happened in the past, like that's not the only one, and then recently. So like the overall question in like DeFi is that like as you're participating in different kinds of like let's say where you can get yields and so forth, there's always risk, and there's the smart contract risk and everything else that collateral liquidation might not work. So you have to always approach with the cautions. Like anything that where there's reward, there's always risk. So that's like a whole finance is based, whole ecosystem of like earning is based on that kind of stuff when you're lending out capital. So risk
Okay.
are important. Like what we have in Aave, we have a risk section. So if you go risk.aave.com, actually docs.aave.com/risk, when the page is working again today. So we have a risk framework where we are detailing the different kinds of risk that we have, and our internal risk team, they basically go through the assets that we are adding into the platform and like what kind of values they have in terms of liquidations to make the system solvent in case of things like Black Thursday when all the valuations of the assets are going down. So in essence, like you need to be very careful, and when you choose your provider, you need to like also see how they're messaging things, how they care about risk. Do they have a risk framework, or do they have disclaimers, notifications about risks? Like try to always understand that when you're trying to get yields into your capital, that basically there's some sort of risk there, and you need to understand them
Got it.
fully.
So basically, what you're saying is that whenever that there is something that is a honeypot, is always a target for hackers. Okay, therefore that there's always that element of risk there. That's right.
Yeah, definitely. And yeah, and like in terms of like Aave, like the interesting part is like it's collateralized lending, right? So when you deposit, the good thing is that there's always more depositors. So if something happens, you can withdraw unless there's like complete bank run and you need to then sell your A tokens to someone. But then there's like collaterals in between. So the system is always like if someone takes a loan, let's say 100 DAI, he has to put 200 worth of DAI ETH as a collateral. So there's like more value in the system to protect. And liquidations are for the reason that basically that value goes down, the positions are liquidated, and the protocol is back in balance. So that's like the cool thing. But you also, like, anything can happen anytime. Like the same thing as any kind of like financial primitive platform.
Okay. Thank you so much. I think that I'd like to end with the AMA session with one last question, and that is right now. Okay, we have about like I think we've hit the 600 milestone already. We have 600 people registered for Southeast Asia DeFi Week. Currently, 100 people are tuning in live from different channels. What is one thing, okay, that you hope that the audience, okay, would do immediately after this session?
Yeah, there's one thing I would love people to do is just basically try to deposit, and another thing what you can do always, you can just buy A tokens from somewhere. I can send you a link to where you can buy. But I would say, like, easiest thing is just to easiest thing is to basically just to deposit into Aave and start earning. So it's that simple. I will also send you a link if you need to just buy like a DAI or sell it.
I'd like to share one comment, okay, from the audience, which I think is really good, which is remember that DeFi, okay, is in development. Okay, there's a lot of things still in experimentation. There are bugs, there are things that don't, it might be clunky and etc. So there will be few short circuits. So just be very careful, okay, and understand, okay, the risk before you actually do get into it. All right. Let's see. With that, okay, I think that I'd like to wrap up, okay, and say thank you, Stani, okay, for joining us, okay, for 2 hours today. Okay, thank you so much for sharing us with Aave.
Hey,
Do join us, okay, tomorrow for the final day of Southeast Asia DeFi Week. We're going to wrap up with our favorite topic, which is Bitcoin. How can we use Bitcoin to access the applications, okay, that are available, the DeFi applications that are available in the Ethereum network? That is basically what we're going to cover tomorrow. Same time, 3 p.m. Okay. And for those, okay, who they can't wait, they're impatient, they want to basically read more about DeFi. Okay, here are a few resources that you can grab right now. The first one is CoinGecko's How to DeFi book. It is 212 pages of comprehensive step-by-step guide to all the things, everything that you need to know about DeFi. You can buy it now for $15 by scanning a QR code right now. If you are serious, okay, about DeFi and wanting to become an expert, there is a course available at Ivan Tech Academy, which you can enroll for just only as low as $22 per month. It's a subscription basis. Scan the QR code and sign up, okay, get yourself enrolled for the next DeFi 101 workshop. And if you are a complete beginner to cryptocurrency, and you are looking for a fully guided program, this is for you. This is a one-day online workshop for cryptocurrency beginners on the 13th of June. It's a Saturday. One single day. We're going to spend the entire day with you, divided into 4 sessions. The first 2 sessions is about how not to lose money in crypto, and the second 2 sessions is about how to make money in crypto. So join us, okay. I hope to see you then on 13th of June. If you have enjoyed, okay, like Southeast Asia DeFi Week, if you've enjoyed our free webinars, you're going to enjoy this one as well. So for throughout Southeast Asia DeFi Week, you get to attend this at 50% off. Okay, so scan the QR code if you want to get this discounted ticket. All right, so it's the end of day 4, and here's your link, okay, of how you can claim your day 4 proof of attendance token. Scan the QR code and give us your feedback. Let Stani know what you think of today's session. Okay, do you learn anything new? Do you find it valuable? And what are the areas that you wish you would like to learn more, or things that we can improve? Please let us know. All right. The cutoff date, okay, is tomorrow. I'm going to load up the banner, okay, if for those who have not claimed yesterday's QR code. All right. And here's something very, very special. Okay. And I think you guys have been waiting for this as well. Um, Stani wants everyone to what's that benefit and start okay experiencing earning interest bearing DAI. So he has very kindly and generously okay offered to give a 5 DAI giveaway for the first 100 respondents okay to fill up the feedback form. All right. So do that right now. Scan the QR code, fill in, let us know your feedback, okay, and claim your 5 DAI. We'll announce, okay, who are the first 100 people, okay, who are eligible to go and get their A DAI. All right. So with that, okay, I hope that I'm going to leave the screen on, okay, for another uh, uh, 1 minute. All right. Please scan it right now and see you guys tomorrow at 3 p.m. Bye, everyone.
Cheers. Bye.